The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. In sunny Clearwater today, it's actually, I think the wind's blowing 35 constantly, and it's very chilly, so very uncommon here. But I'll be seeing all the folks at TFNN later today and tomorrow. Looking forward to it. Surprise visit. No, seriously, planned visit, and looking forward to seeing Tommy, and all the rest of the guys over at the TFNN shop. Al, Steve, the rest of the gang over there. Showing the Shanghai right now. Looking at the daily, obviously, I was traveling Friday, missed the show, had a lot of action since then on the north side. And looking at the Shanghai here, we broke out of our dailies. I just want to show you that we talked about the initial target on this particular index was around 3,000. And just to review this a little bit better, here's the weekly unfair high here. That was the 3056 neighborhood target that we talked about. We reached a high today already, 3028. So again, Shanghai kind of disconnected in general from what's going on in the U.S. markets. But, you know, we talk about anytime Shanghai's been going down, seemingly the U.S. stock market's been going sideways at best bare minimum. And then, we get a little pop and, there's at the same time, I don't have to tell you guys this, some decent dovish news on the whole from the Fed. I mean, these are all things that the market enjoys hearing. So as we look at this, we're going to cruise around a little bit, look at some other indices globally here. You're going to look at the June contract of the Nikkei, and I hope you guys are doing well in the den. Got a little bit of a limited real estate here, so I'm going to be checking back and forth with the den when I can to look at questions. But here's the Nikkei. Not a lot of, action really other than some sideways action on the Nikkei. So nothing really to write home about there. No breakouts, still kind of staying within a range between 16,370 and 1720. Looking at, let's just go into the 10-year really quick just to cover some bases here. Talked about that 129 being a hopeful retracement back up. This is a trade that really didn't pan out last week. I was hoping we kind of close below, go back and retest that dovish type attitude by the Fed is really kind of disengaged this from the travels down, so to speak. And again, now you got the close above last week, above this 129 neighborhood. I'm stopped out of a short. I actually, wanted to take advantage of something like this. Got a little bit higher personally that I really wanted to deal with. And then the weekly close, and this is a really good example, folks, of, you can actually set a noise level on your trades and kind of make that relative to profiles and some of these inflection points. But as I'm showing this, when we get a weekly close one way or the other, those are kind of stakes in the ground and it could, the 10-year could fall off here. There's no question about it. But we've had a market rally based on some of these things I just spoke of and quite a few more. And we get that weekly close above that inflection point, and the market has had a tremendous climb, the stock market in general. So again, if we have a kind of a market pullback, you could have a little bit of a note rise based on that alone. So again, that weekly close is very important, but you're also looking at some situations when it comes to the S&Ps. I'm going to review this really quick. We're going to look at the S&Ps here on the daily. This is our situation. We kind of spun above that 2,000 general area and didn't get a daily close below. That's what we had talked about on the show, trying to, Joey was on. We had talked about, this market really might be out of gas, might be looking a little heavy, but we never got the confirmations. And that's what I love about these profiles. And that's what I love about the scanner is being able to gauge. And by the way, we had a little bit of a trouble with the ETF breaths last Friday. And what we're doing, all these cell structures, everything is operating perfectly in the scanner. We had just a couple of blips with the ETF breath. So when we look at the futures section, just want to alert you guys to that. We're actually getting it very in line this morning. All these cell structures within the scanner are always correct. And when we look at those ETF breaths on Friday, we noticed there was a couple little problems. So I apologize for that. We're getting it fixed this weekend before the market opens here. So looking at the S&Ps, there's those inflection points. There's that 1998 general area. There's the 240s and an uptrend for 40 straight 240 bars. Here's the chart data on it. And I'm at a low connection place here right now, so we're gonna probably have a little issue with the data coming up here. Let's go back to our e-signal. So as we look at the 1998 area, as that daily close never happened within that balanced area, to kind of state that, hey, you know, we may be traversing back into the balanced area. You know, we really spun above it. That was kind of concerning. And then we had the kind of launching pad, new highs off of that. And that's when, you know, you've really got to take that for what it's worth. And on the short side, you really hadn't had a chance to get heavy on a short or even really, I mean, case in point, going back to what Joey and I were talking about last week, markets being heavy looking doesn't necessarily make it a short opportunity. You still want to, when we say things like that, you still want to be able to kind of get a leverage point and get a confirmation, if you will. And I trade off of intermediates and long terms a lot. So that's kind of what we were looking at there. Here's the short term. Here's the day, the 240 minute. We've already hit the top of our profile on our 2042.75. Let's call it 2043 on the 240 minute S&P move up. So again, if you're looking to, you know, put a gun to your head and look at placing some shorts, you've got 2043 up top to leverage off of. And then if we can get back down below 2031, remember, a lot of times we'll use these 240s to regulate the trade up. And if we have a relatively thin profile and then we have a break below 231, I'd feel okay about getting in the water for a retracement back into some type of inflection point. But remember, this trend up in the S&Ps really, we need to see a yellow bar, or in the scanner, I'm going to go back to this, we really need to see a yellow peel back happening on our daily to kind of really start taking longs off from this run up. If you guys have been long, I've been kind of passing on some of this because I hadn't really been a believer of that. But again, it's allowed me to block out one side of the marketplace and stay away from the shorts until we get a stake in the ground. Very good lesson there. Guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And Google had a big major DNS problem last week. We've actually switched off of that to an open DNS. We had our ETFs kind of looking for that on that server, and I apologize for that being a little slow on Friday. We've got it fixed. Here's where we're at again with all of our ETFs showing, except for our staples there on a 4-hour, and again the utilities on a 60. Finally had a little bit of a pullback in the utilities. I want to show you guys something. We talked about the S&Ps. We talked about, again, when we talk about something being heavy, unless you're trading on a short-term basis, you really want these intermediates to kind of give you a clue and some kind of confirmation. A close back within 2,000 would have been great. Then we could have looked at 2,000 for that. All right, it's done what it's going to do. Let's wait for a retracement. If that happens, that's great. And then we can start looking at it as trading within the balanced area and trying to get some trades off based on somewhat of a range. We're going to take a look real quickly at some of the internals of the S&P. We're going to take a look at and my goodness, we're kind of slow this morning. All right, so little bit of a pullback in the consumer staples. I want to, again, apologize for the slowness here. Again, you're always looking when a market goes up like this and goes up consistently, it can clear the air and very easily clarify what's not wanting to be bought. All right, now sometimes you've got those anti-sectors and stocks that are going on in this XLU situation we're going to talk about in a little while. It's been a little bit of an anomaly for me, but consumer staples, again, 52.65. We didn't get a close below there, but if we're looking for any type of change in tone on those 240s, the S&P's getting below 2031. I think we've got an opportunity to look at this. I know we're trading up a little bit this morning already. Or actually, let me see where we're at. No, we're not open this morning. Sorry about that. We may gravitate down below this 52.65 area, and then we'd start looking into the scanner. We go into our staples area right here, and I think it's not a bad situation to start. And again, we got breadth positive here. There's not a lot of things really going on the intermediate and long term to take a look at from the short side, but you do have some things that are showing their hand early and have been consistently relatively ugly. Kroger's one of them. You've got some other things that are starting to kind of show the red shoots, if you will. Let's see. And I'm just looking across the board here. Obviously, Indo International, ENDP. Let's see what else is looking good here. So Kroger's on our radar screen. We're going to look at that one. Not a lot of them. Yeah. Let's take a, let's see. Well, man. Had a lot of them change on the short term, but this is kind of a sector rotation situation. Let's take a look at Kroger really quick. All right, so this is what's kind of a little bit of a shame here is, we haven't had it cooperate lately. This is Kroger. We don't have a lot of inflection points to lean on here on the long term or intermediate. And I don't know where let's see if we're opening this morning. Nothing yet. All right, so, how would you trade this? It's showing itself as weak. You don't have any inflection points to lean off of here. We're not at a top or a bottom or breaking down in this case would be nice. And why can't I get my screen to adjust here? Okay, here we go. So, the thing I like about being near inflection points is the first thing I think about is the defense part of the trade. So, and you factor in the risk rewards scenario. So if I look at this trade and I look at Kroger and I'm saying, okay, well, we're kind of in the middle of the balanced area on the daily. I don't like that for starters. If I understand that I can place my stops above 39.30, then where's my targets down below? My initial targets are 37.29 and possibly even lower. The good news is I've got that long-term action below our weekly profile. But that being said, I don't like the risk reward of this trade by being able to place my stops above 39.30 and only having the upside $1.25 below. So, this is something I'm not exactly excited about putting on as a trade based on that alone. So let's just keep looking. And let's see here. All right, so SJM. I don't like that one either. I'm just kind of showing you what I do right now, guys. These are not preset. I haven't cherry picked anything. I'm just looking at some things that are starting to show. Let's look at MKC, McCormick, and let's also look at Hormel Foods. So this is the sector that we've kind of drilled down into that may be something of concern when it comes to giving out of gas. And if the market does turn south, these are the type of, I'm not going to call them arbitrage opportunities, but, you want to always look at trying to sell the weak stocks and buy the strong stocks. And that's a, if you listen to Tom, some of the, I know he's traded against a specialist or seemingly trading the listed stocks in the old days. This is how a lot of those guys run their books. They have to show their self. They get the orders, and again, the specialist doesn't really control the stock as much as he used to anymore, but that's how they run their book. And this is kind of how you can trade against the specialist in the old days. And I still think this is an extremely, things are not going up for a reason and things are not going down for a reason. And you want to try to block out one side of the marketplace when you try to put some type of trading scenario together. So we're going to take a look at MKC really quick. MKC. Oh goodness. Yeah. This one, again, market's gone up pretty significantly past couple of weeks. Had a little volatility this week. I like the action on this actually. Now this is a little bit of more of a scarier trade, if you will. But again, and it's a relatively expensive stock. But when you look at this and you look at this really thin profile here, right? This is another one of those little esoteric type pieces of information. In my opinion, if you got the consumer staples looking as relatively weak as they are, some of the short-term breaths have started rolling over. This is our 240 minute, right? So we got the daily sitting again at the top of the profiles, not the best thing in the world. I think the trade on this, if you're going to look for a little bit more of a, some of these stocks also, when the ones that have climbed a lot are obviously the ones that can pull back a lot. I don't like to play that game very often, but if you look at 94, 97, you got something to lean off of there. And in my opinion, since we haven't really, and we've got a thin profile here, remember, we could see 92.86 and even lower. But the good news is you do have some kind of floor that you can use as a stop-oriented situation on the 240. Now, again, this is a pretty strong stock, but I like the action on Friday. I like that reversal. And again, the sector is kind of putting the predicate on what might be something to get into from the short side. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And we were talking about a particular stock, MKC or MCK. Let me make sure I'm getting old here. MKC, McCormick, excuse me. Let's take a look at another one in this sector really quick. Procter & Gamble. Now, this is kind of interesting here. Let me pull this up. Good old PG. I used to hate the specialist on this stock. Okay, so again, pretty big week up. This is something, again, it's kind of the anti-stock. I would stay away from this one, even though we're at the top of a weekly profile. This is not one that's, and again, I like the action on the Friday trade on MKC. Not a lot of other, this is what's happened. I mean, when you look at this, you look at the Coca-Colas of the world, let's take a look at this one. Kellogg, this market's strong, isn't it? We're trying to find the weakest sector, and it's just kind of horrendous. Okay, here we go. All right, let's look at CAG. This one may be something that we would take a look at as a high. Oh, yeah. Okay. All right. So again, a sector that's not done bad, but again, this is the weekly trade on CAG. Okay, I like this trade. Here we go. All right. So we've got 42.18 top of the profile on a weekly. We definitely got something we can lean against here on the daily, which is around this. And you could look at this as well. It's pulling back to support, and the market may go higher. The market may go higher, but we're always looking for things that are going to be as least painful as possible if we're wrong. So again, we're trying to find things that are clarifying themselves early on a market that might be the situation where rising tides lifts all boats. So we've got this situation here. We're getting below 43.24. Remember, we've come a long way in a, ConAgra Foods, I mean, give me a break. That's a pretty big move for this particular stock and this particular type of stock in this particular type of sector. So getting back down below this recent unfair high and current unfair low, below this 43.24 neighborhood, you could have a nice little ride down into 42.18. I know that's, what a 2 or 3% move. But again, I think we could traverse even farther down and start exploring the weekly fair auction again. So you've got a decent little risk reward, in my opinion. Not a lot of points in that trade, but again, we're looking at something that could be, again, as least painful as possible if we're going to put on some shorts right now. So going back to the scanner, we're going to look at our futures section. We're going to look at a Forex couple of pairs in just a little bit here. But as we look at this, we're going to notice that the S&P is still in go-go fashion here. All arrows up, even in the balanced areas. We want to see the S&Ps get below this, in my opinion, 2331.5. And we're trading right now a little bit higher than that. There's a level in the market on all the different inflection points that we look at. And I think we've hit this POC this morning at 2046. Now, that's something we want to reference here. We're going to go back into the S&Ps really quick. When we have a weekly profile that's relatively wide, these POCs on our wide profiles, especially on the long term, are pretty serious events. So we've got to pay attention to them. And that POC is at 2046. So we've hit a high this morning of 2044 and a half, 2044 and a quarter. We reached that high 2043 on Friday, so we've kind of bumped up against it. I want to see things get away from these type of inflection points on the long term. It's kind of rattling around here, but getting below 2031, I think will put some possible retracements in place, and then we more than likely at the same time would be seeing some hints of a new supply area possibly starting to happen here on our daily. So again, it's kind of still of a wait and see. If you've got to put some shorts on right now, you got an inflection point up top here above 2046. And then I think you could probably add to the position below 2031 on the short side for some retracements. But again, we've come up. I mean, let's just take a look at this. We were at 1795 on this particular contract 2 months ago. Had a pretty good run, and we may be in store for a little bit of a retracement here. So 2046, again, stops above that area, and then, in my opinion, being able to step on the gas a little bit below 2031. All right, let's take a look at gold really quick. We're going to get back to the scanner. And that's why I brought this up a while ago. Here we go. There's gold. Again, profile below, sitting right at the bottom of that profile. So around that 1244.5. Let's take a look at this. It's showing that we're in that vicinity. Here's the situation. There's a level of the market. We're just ticking right below there right now. Interesting setup here. Let's take a look at this. So here's gold. Man, things slow here. All right. So there's that big 2064 number. Now we're getting a retracement again. And, you know, that was awful last week when we never got down to that 2018 area that we talked about. 2019, we got as low as 2026. So I never got a chance to put a trade on down there, and it just kind of left. The horses left the barn. That's what happened here. But now if you're looking at something on you know, for buying retracements on gold, you've got something to hang your hat on here. You've got 1244.5, a new inflection point. We've hit a low this morning of 1241. We're trading right now real time about 1243. So right below there, you know, you want to see this thing get back above, if you're going to be looking at this from buying support, that 2044.5 area. Here's the 240s. Short term, getting back into that inflection point around that daily unfair low. So what do you do with it now? I'd like to see, again, I'd like to see this thing get back above 2044.25, 2044.5 if you're going to nibble on the long side. And that's just the way I'm looking at gold. But yeah, again, gold's looking kind of heavy too here. Let me see. Yeah, I don't like the way it hasn't really. It's kind of used that as a little bit of a fence to lean on around 1264. Trade it lightly if you're going to trade gold right now. We may be due for a little bit more of a pullback than this support area at 1244.5. I'm a kind of a fan of sitting on the sidelines on gold right now. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. I just did a little sort on the scanner. I don't know if you guys are seeing this, but I wanted to find, this is what I did. I went into the dashboard and I looked at all the S&P 500 stocks out there. And I know some stocks have turned on the short term, but we're going to do this little sort right here. We're going to look at stocks trading above profiles that are kind of starting to show some possible, areas of concern here. ConAgra Foods, CAG, we talked about that earlier in the staples arena. Just wanted to show you that there's one stock meeting that criteria right now. And that's one that could possibly just kind of throw up below that area. Again, not a lot of upside initially on that trade, but it's something to keep on your radar screen. Let's take a look at stocks still trading below profiles on the weekly and daily. There's not too many of them. These are ones that, again, Ford Motor Company, ooh, ouch. Alexion Pharmaceuticals. Let's take a look at see how that thing's doing. ALXN. We talked about this last week. Here we go. Come on, E-Signal, here we go. All right, so, we talked about, again, last week, and I missed the show on Friday. We talked about that retracement back, close below profiles. We're weak on the weekly, the daily close below. We go back and hit a high of 136.74. Got very close to that unfair low, 137. Let's just see where we're at here. Got into that general neighborhood on the retracement back up into that breakdown. And now what do you do with this? So again, still showing itself as a relatively weak component of the S&P. Again, here's the 240s. Man, something to continue to keep on the radar screen. Let's go back into the scanner really quick. Let's look at this ENDP. Let's take a look at this one. ENDP. Here we go. You guys have any questions, just throw them out in the den. I think I hear crickets in the den right now. Monday morning, blues. Everyone's frozen. Everybody turned the heat off ahead of time. Here we go. ENDP. All right, so it's a $29 stock now. A couple of weeks ago, it was a $50 stock. So here we go. Again, getting a couple of weeks have passed since we had that more recent breakdown below that 50 area. And now what do you do with this thing? Well, there's really nothing to hang on to down here yet. This is something I'd pass on the short side. Again, this thing could continue to trail lower. But remember, these 240s, there's 50, here's the 240s. Haven't really had any things to be concerned about except for back about around 41. We had a little bit of a break there, and then we had the breakdown again. So again, you got to wait for some new inflection points on this, and the scanner will put those in your face as soon as they happen. So you'll see some changes in color there. You might want to put it in a custom portfolio. Let's take a look at ICE and F. Man, these guys are buying everybody. Anyway. Let's see. Man. All right. This is ugly. I'm going to have to reference the long-term charts. Okay, so again, getting a retracement back up into an inflection point, kind of empathetically moving up with the market. Here's the unfair high, 237.69. Remember, they're spending a lot of money, these ICE guys. And we've retraced back up in that 237, 238 area. That would be something to orient stops around. Could get a ride back down to the bottom of that 240 fair auction, 233, and even lower. What in the heck happened to my, well, we have destroyed somehow my my quote list here. Oh, there we go. I was losing my mind. Never seen those symbols before. let's take a look at the other stock that we had on our radar screen here, Ford. Tammy, you're going to have to send us a photo of what that looks like. Doled up for work, not doled up for work, and hair all over the place. The den wants photos. Here we go. Ford. Okay, so again, climbed up with the market, not making new highs with the market. Here's the weekly. This is kind of a trade I like, actually. You got 1268 sitting down below. You got 1371 you kind of come up against. You're kind of crowding it again. But again, any type of market help, we could see a pullback into that 1268, which is kind of coupled with that unfair low 1254 on the daily. So not a terribly bad trade here. Trading pre-market here around 1364. So again, staying below those inflection points here. I like this trade, actually. What did the guys from Dumb and Dumber say? I like it a lot. Here we go. All right, let's take a look at a couple other things here. Let's see. We looked at Potomac Electric the other day, still weak, still showing some signs of weakness. We're going to take a look at the Aussie dollar in just a second. Not a lot of stocks showing ultra weakness here. Man, look at that. Let's see. Nothing here, nothing here. Let's take a look at WMB Williams Companies. All right. Okay, so this is one. I like this one too. Weak, retracing back up into some inflection points. This is probably the coolest one we've shown, actually. And again, surfing through, I like these types of setups. You can leverage off of this 1814 area. We're trading closed at 1815. I kind of like how this is retraced back up into this. Could use that as a fence, if you will, to get some shorts off on that stock. I'm not interested in buying stocks right now. If you can catch my drift, it's something where we're trying to find opportunities. If the market does pull back a little bit here, some of these stocks may just kind of fall apart that we're looking at. All right, so let's go into our other server here. Let's look at some currencies, and let's look at the Aussie dollar. This is one. It's got helium in it now. So we're looking at this, and again, you know, the commodity rise hasn't hurt this situation. We retraced back down into that close above 74.40 area. We talked about that. Here's kind of the current on this. And again, we're going to look at the U.S. dollar. We had that breakout again and the retest, if you can see this on the Aussie. Almost found support there again. And, excuse me, right there. retraced back down into 75.34, that unfair high, 75.42. So what do you do now? We're going to talk about that when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We're looking at the Aussie dollar. I just want to go back and reference something really quick while we're on currencies. The U.S. dollar. And without question, we've had a little bit of a pullback here, if I can put it in those terms. Here's the U.S. dollar. Here's that retracement back up into those inflection points on the daily. And, we don't deserve or have to float back up, but when we break down, it's always a decent trade when we can go back and retest those areas. So again, here's the 240s. I'm just kind of waiting patiently on the U.S. dollar for a decent retracement back up again. And I think Mr. O'Brien's been relatively correct on this one, and I'm not going to argue with that. So as we look at this relative to the Aussie dollar, we're going to go and look at a couple other currencies here really quick at the same time. Man, these currencies trade so fast. When you're trying to do price derivatives off of something and run certain, it's amazing if you're doing calculations on things that trade this quickly. And I know you guys know what I'm talking about if you trade currencies, but if you really examine what the print outcome of, or the outputs after the prints happen on this, it's quite it always astounds me. Anyway, I'm sorry. We're going to look at the Canadian dollar really quick. So, some of these, and we got to look at oil too when we look at these particular currencies. There's Canadian dollar. Again, nothing to really write home about, except we have no long-term profiles attempting to appear there. So we're going to take a look at that's the wrong server, guys. Sorry. Here we go. We're going to take a look at crude oil and copper and a couple other things before we took a look at gold. That's just sitting right at a precipice there. I'm not a fan of trading gold right now. We're going to take a look at copper. Again, Joey's been a fan of continuing to try to stay long this. There's the 2026 area sitting there as support now on copper. A little bit of a pullback this morning, which is okay. There's our April contract on crude oil. We talked about, what did we rally up into? 41.20. So this is crude oil, and it's nice how we're bouncing already off of that 38.54. And why is this so important? So here's crude. We talked about the last leg up on this would be in that general neighborhood of 41.82. So if you're seeing my screen here, we reached a high last week of 41.20. So we got very close to it, and we've pulled back. 38.50 are the unfair lows on our weekly, and they happen to be the unfair highs on the daily. So this is, again, kind of closing above and going back and retesting. Didn't quite get up to that 41.82 area. So, again, I think you got a decent opportunity. Stops below 38.54 on crude. That's kind of a get on the bandwagon on the commodity trade still, I believe. I don't think we're in danger of selling off here. We've actually had a really good bounce this morning already. And what does that mean for the Aussie dollar? That was the original question, I think. So here we go. And here's the Aussie dollar. And fact of the matter is, I am still bullish on the Aussie dollar. Stops below 75.42 now. Okay, guys? You've been great. Stay tuned for Larry. And I think I'll be in the studio tomorrow morning. So see you back then.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.